Do you have a home loan and your mortgage broker recently did a home loan health check on you? Did the mortgage broker advise you to refinance your home loan to another bank? First reason I could think of is that you want to get a better rate because the cash rate has gone up. And so you're now seeing your monthly repayment going up. And one way to save money is to get a lower mortgage repayment that can only be achieved if you get a better rate than what you're on right now. Another reason I can think of is probably you'd like to do a minor renovation. Other reasons I could think of is that you'd like to consolidate a few of your debts that have gone out of control and you're having difficulty paying. And so you've got some credit card debts that you need to tidy up or some personal loan that you need to consolidate into one debt and include it in your home loan, and you get a lower rate and of course a lower repayment. There's so many reasons why you'd like to refinance, and what I'm going to provide you in this video are tips on how to prepare for your refinancing. First tip, know why you want to refinance your home loan. Refinancing to get a more competitive rate is a great way to save on your mortgage repayment. Another reason is that you probably took out your loan so many years ago and that particular loan product or loan feature does not suit you anymore, and there's a better product out there that best suits you. And so know the reason why you're doing this refinancing. Tip number 2, understand loan products, loan feature, loan repayment, and loan term. What does this mean? Nowadays, there are all sorts of loan features and tools to help you save interest and get ahead. Two of the popular loan features are the offset and the redraw account. The offset account is actually a separate transaction account where you can actually put your extra surplus money in there, and then it helps pay off the home loan much faster because it reduces the interest that you pay on your home loan. A redraw account, on the other hand, is not a separate facility. It's embedded within your home loan, but it works the same way as the offset, and you don't have to pay extra for a redraw. If you choose a variable rate loan product, that redraw feature is available for you, as opposed to an offset in which you need to pay probably $10 a month to get that offset feature. But it works the same way. It helps you pay off your home loan faster because you have less interest to pay. Whatever money that's sitting in your redraw account or your offset account helps offset the home loan. You also need to understand loan term. So the maximum loan term for a home loan is 30 years. But if you're consolidating your credit cards or personal loan, it doesn't make sense to put that particular consolidation into a 30-year loan term because you end up paying more interest. And so if you're doing a debt consolidation, let's say you have a credit card balance of $20,000 and a personal loan of $30,000, and you want to consolidate these two loans into your home loan, the best way to do this is with the combined $20,000 and $30,000, that's $50,000. You put that as a separate home loan account when you consolidate it, and you do a loan term of either 5 years or 10 years instead of the full 30 years. That way, you get a lower interest rate and you're still paying with the same loan term that you're doing if you were actually doing it as a credit card. Tip number 3, check your credit score. One of the things lenders look into when assessing your ability to repay a loan is your credit report. Your credit report may include your credit score. This is a numerical value that represents your credit worthiness and how reliable you are as a borrower. The higher the score, the more banks you can choose from, and the better chances of you getting your refinancing approved. Tip number 4, get your home ready for valuation. What do I mean by this? Your broker will order a valuation of your property prior to submitting a loan application to the bank. What the banks want to see is that there's a 20% equity in your home. So like let's say if the house is valued at $1 million, they want to see that there's like an equity of $200,000 and that the loan that you're actually refinancing to the other lender does not exceed 80% or $800,000. The reason why you want this 80% loan to value ratio is that you've got more flexibility. You also get better rates. The lower the LVRs, let's say the LVR is 70%, the more competitive the rate that the bank will provide you. If you want to find out if refinancing will work for you, speak to us, call us. We'll find out about your needs, objectives, your current financial situation, and then we'll find out whether your existing lender can actually provide you with the solution, or we may need to bring you to another lender who can actually help you achieve your goals and aspirations.